Very good evening, everyone. My name is Billy To. I'm the head of regional retail research, and today with me is Judith, our market analyst. So we will be talking about the US market. I think there are quite a bit of movement in the US market. I think overnight we've seen the US Fed cut its first interest rate in 4 years, I think, 50 basis point cut, right? So that's quite huge. But before we start, let me just do a brief introduction on why we're doing this webinar. So over the next 3 months, we will be running a trading campaign. So if you've been trading with us on the US market, you can get up to $100 cash back, right? So you can actually refer to the TNC. There are actually 3 tiers within it. So it'll be very interesting. So you can take advantage of the market movement as well as take some cash reward when you trade with us. Right. So during this period, Judith and I will be conducting a webinar on a monthly basis to talk about the latest market developments in terms of what's happening, what are the key movements, what are the investment opportunities that are there. We also will look into technicals and of course some of the key risks that you guys need to pay attention to. Now, the webinar session will be quite different. I think we've gone through this a few times before. It will not be a presentation per se. It will be a market dialogues between myself and Judith. We will be talking about what's happening overnight, as well as we will be focusing on 3 key elements. Firstly, on the US Fed rate cut that has just happened. Then, of course, the AI stocks, of course, whether it's a hype, whether it's overvalued, or whether there are still opportunities within that space. And of course, what to look forward to with the president election just around the corner. All right. So I'm just going to start by this, Judith. Overnight, right? There's a 50 basis point cut. What do you think? Is it something that is within your expectation, or was it more than what you have expecting, right?
Yeah, okay. Thanks a lot, Billy. Hope everyone can see my screen now, huh? Okay, so basically, I think the rate cuts were actually a little bit above my expectation, or more than my expectations. I think the last sharing that I actually made with our clients are right. Actually, I was sharing that I think my expectation was a 25 basis point rate cut, right? And I think what we saw from the markets in the week leading up to the rate cut, right? You saw a bit of a rally in the markets. And I think a lot of that was because the markets were actually beginning to price in a 50 basis point rate cut. And I think it doesn't really make sense, I think, because expectations wise, and like from us, they investing professionals, we were all thinking 25 basis points are, but I think market wise turned out to be right in this case, and 50 basis points really came true.
Yeah, I think if you look at the reaction in the market, right? I think there was some sell down after the announcement of the rate cut. I think if you look at some of the commentaries, there are some question mark whether the Fed, the 50 basis point cut, the jumbo cut they call it, right? Is it a signal that they're rushing it? I mean, if you look at historically, right? I mean, whenever there's a gradual interest rate cut, usually we will see some market rally in the longer term. But if there is a rush or a jumbo cut such as what we've seen, it could probably signal that the economy in US is not as strong. What's your thought on this?
Okay, I think basically to start, right, I think what I'll do is I'm just going to run through, like, you guys can see my chart, right? So I'm just going to basically talk through, like, some of the differences between, like, what the last Fed meeting brought about and what this Fed meeting was like now. Okay, so you can see that this gray line that I have here, right, is the previous Fed meeting, right? And so the expectations are always that this rate cut path was going to be in this way, right? And you can see this new red line now, right? It's the new rate cut path. Very, very clearly steeper and also very clearly a bit lower than what was previously expected, right? I think one of the things that really helped out, right, was that expectations for inflation is actually a bit more toned down. So you can see that my chart below is actually the inflation numbers, right? You can see that it's actually a bit more toned down. And later we'll talk a little bit more about the economic side, right? But you can also see that when you talk about the Fed's projections, right, they are also projecting unemployment rate to be higher than previously. They are projecting GDP to be very, very slightly, but lower in terms of growth compared to previously. And I think lastly, right, when you talk about your inflation, of course, that's where I have said here, right, it's actually projected to be a bit more of an easing. So it's because of this confidence in the inflation side, right, and the expectation that I think unemployment rate will not meet the expected target as set previously, right. I think that's where the Fed is actually making a bit of a move, I would say. So I think the signal and the worry around that lies around the fact that economically might not be as good as what we thought. And I think it sends a bit of a signal of worry, right, whether the soft landing can actually really play out.
Well, interestingly, right, Jide, if you look at the futures, I think it's pointing towards uptrend, right? We're looking at it right now.
Yeah, I think very, very clearly so, right? So I think a lot of the reason why there was a bit of selling, right? I think it's a bit of a selling on the news kind of front, right? Because as we all know, lah, right, the market was actually already building up and then kind of expecting a bit of a rate cut, 50 basis point rate cut to come in, as I said, right? So I think once the news came out, there's 50 basis point, right, the market just kind of like, okay, this is what it is. There's a bit of profit taking that took place, lah, right? I think now the market is kind of still in a digesting mode. We are still seeing how things are going. And I think to say that rate cuts do lead to some upside, I think generally that still remains the case. So while there are still larger question marks on whether this rate cuts point towards the economy being weaker than expected and so on, I think generally what we are looking at is that the rate cuts are still generally positive for stocks.
Okay. Before we continue, I just wanted to remind the audience, if you have any questions, you can just put in the Q&A section box there straight away, and we will look into it as we proceed along, right? So that
Yep.
you don't have to wait until towards the end of the session to ask the questions. Right. I think questions that probably a lot of people want to know, what to invest in this new easing cycle that we are looking at, right? What are the sectors that will benefit from it? What's your take on this, Jadif?
I think sectors that benefit actually, okay, firstly to start out, right? I mean, this is a bit way too broad, right? But the way too broad answer is that all sectors will likely benefit, right, from easing interest rates. I think very, very simply put, you have the ability to do a reinvestment, right? Or you can actually do a bit of a value changing of your rates, right? You reduce the rates of your borrowing. All this will help most of the sectors, businesses generally. I think one of the biggest things, of course, is of course technology sector will be a very big boon now, right? Because I think when they rely a lot on funding, right? When you rely so much on funding, right, you will definitely high interest rates definitely put a bit of a cost on it. So I think it increases the capital and decreases the interest rate cost, right? So I think tech sector is really one of the things, right? Of course, the other thing that we have seen really very, very clearly, right, is real estate, right? And real estate, I think one of the curious things, of course, is that you talk about lower interest rates, right? You talk about lower mortgage rates when lower interest rates, right? You talk about things like your property investments actually can encourage property investment because, again, lower rates helps the fact that, you're not going to pay as much of a borrowing cost, right? I think your property valuations also tend to go a bit higher, which is why I think real estate tends to do a bit better during this period of time. Outside of that itself, I think your generally things like your consumer discretionary tends to do better. Again, similar case to your technology side, right? But one of the other things for consumer discretionary is also that low interest rates tend to boost consumer spending, right? So I think some of these things will actually help really with your longer term prospects, right? And your big ticket purchases like things like cars, your appliances and things like that actually tends to go higher. So when your interest rates are lower, right? Because again, cost of borrowing tends to go down. So it makes it easier for consumers to actually take on credit to actually go and purchase some of these things. So I mean, that will be my 3 sectors I'm actually going to look at a little bit. Yeah.
Okay, let me just share it for a while. Just share this.
Yeah.
Okay, can you see this? All right, so basically these are just some of the sectors that we think will benefit from the US Fed easing cycle. So I think one of it that you mentioned, I think you mentioned the tech stocks, the real estate and REITs, as well as consumer discretionary stocks, right? So if you look at the US, I think one of the data that we want to look into is the credit card usage. And I think this would be one of those that comes in handy with the interest rate cut, right? So this will allow consumer to actually continue to, spend. There will be a higher disposable income for them to spend per se. Then, of course, your dividend stocks will also benefit from this because with your interest rate coming down, so it becomes more competitive rather than, having to compete with your high interest rate environment, right? Then, of course, smaller cap stocks, I think, just as I think in general, like what you mentioned, right? The reduction in your interest rates improve the market sentiment because your borrowing costs have decreased. This allow you to spend, you reinvest your income into, to build and develop your business per se. So some of these small cap stocks will also benefit from them. I think we'll talk about some of them later. And of course, I think this is a bit more speculative by nature, cryptocurrency related stocks. I think if you look at the crypto market for a bit, it's come down for quite a fair bit, mainly due to the interest rate hikes that we've seen over the last 2 to 3 years. So I think with the interest rate easing cycle coming in, so this will be one of those that probably benefit from it, right? So yeah, so we're just gonna jump into some of the stocks that we can mention within each sector space. You want to start by talking about some of the, I think maybe your real estate. I think you talk about Welltower, right?
Yeah, definitely. Let me just share my screen.
Yeah.
Okay. So I think one of the names definitely that is always been a bit more of a positive name, right, is Welltower, right? So, excuse me. So we can very clearly see that, right, Welltower has really a very, very strong sustained uptrend at the present moment, right? I think all the way from your 2022 lows. So very, very nice, strong uptrend, very clear pattern of higher highs and higher lows. I think it even kind of post earnings are right, it even kind of shrugged off the bearish divergence formation that I think that was a bit of my worry for me, right? For short-term weakness. You are still holding around the 50-day moving average. And I think from the time that I last shared about it, right, I think that was sometime in August, you have see another climb, another leg of a climb. So I think rate cuts will definitely still benefit, I think, Welltower. I think might still have some upside to go. I would still normally advise investors or, for this type of trending names are right, still nice to go and wait for a bit of a pullback, right? Because your RSI is a bit on the overbought side, right? So and then very, very high valuations at the moment, right? So you might want to wait for a little bit of a pullback. But I think generally such names are right, are the names that have good opportunity when you talk about pullback. Buying into it, I think tends to be a good thing. So I think Welltower is one of the names definitely I would quite like.
Okay, I know Wealth has been doing quite well. I want to bring up a name that has not been doing too well this year at the moment. I think Crown Castle, I think the infrastructure REIT, which actually owns Salesforce and fiber networks. So I think the chart might not be as nice as your Wealth Tower, but just wondering, how do you see based on the technical, I mean, with the interest rate cut, which will likely benefit them as well. How do you see this? Yeah, we have
I
a
think
question.
I would say that one of the things that again right, for Crown Castle right, while the fundamentals, I think, as you can very, very aptly touch on later right, I think some of the fundamentals of Crown Castle are actually pretty all right right. But I think one of the things that I do worry about on the technical side is that this is a very, very clear bound of kind of resistance right, around this near this 120 level. So you can see that that's kind of touched across a few different points right. I think the other side of this is also that we can see that there's kind of a bearish divergence setup from this August period leading into this September highs, right? So normally this sort of bearish divergence, again, unless it plays out, it can very clearly easily negate itself, right? But for now itself, the bearish divergence setup is still very, very much enforced. So one of the things that I could potentially see happening, right, is that there could be a bit of a pullback, at least towards this prior swing lows and potentially even lower towards this 200-day moving average near there.
What's the level?
That is so. The price windows is around this 108, right? As you can see here.
Okay.
Wait, let me zoom in a bit. Yeah, 108 around there, right? You can see this is the price swing low levels. I would say that the next point near this 200-day moving average also is near this kind of resistance turn support, right? So these are some of the potential levels that I would think that could be a nice entry point if the pullback actually holds to these levels. But I mean, generally for me, I think one of the things I'm just a bit worried about is that you have this bearish divergence set up right along a pretty important major resistance level. So
Mhm.
I would say technically there could be some short-term weakness that sets in. Yeah.
Okay. I think we have a question. I think it's asking historically, US stock market will come down after Fed commence rate cut. How do you think this time it will be it will be like? Do you want to go first?
I think my own thought right on this regard, I think would actually be that rate cuts do historically you tend to see some downside, right? Actually, it's because the market is really forward looking, so they are already expecting the rate cuts, right? So a lot of the time they already have started pricing in the rate cuts even before the rate cuts happen. And so when the rate cuts happen, it's a bit of like a selling on the news kind of situation. I think this time why it might be a bit different is because you're looking at quite a bit of rate cuts over the next few years, right? Or at least that's a projection, right? So that is a very, very different kind of cycle and outlook. I think secondly is that I think it might have gone a bit under the radar, right? But we are still in a bit of inverted yield curve kind of scenario, right? Whereby your 2-year yields are actually still a bit higher than your 10-year yields are, right? And so until this kind of rate normalization takes place, right? I think my expectation is that there could still be some leg and room for upside to run, right? I think that when I'm going to start to worry is when the rate normalization fully settles, which is that 10-year yields start to see a normal yield curve take place. Your 2-year yields is lower than your 10-year yields. I think once you start to see a bit of these things take place, right? I would say that's where we are kind of reaching the end of the run. We might want to be a bit cautious on the stock market. That for me is my take for now, right? I think when I think about it longer term. Billy, yourself, would you care to answer the question as well?
So I think a lot of the time, if you look at historically, I mean, whenever the Fed rate cut, it happens, it usually coincide with a market economic slowdown or recession. I think if we were to face a recession or a sharp slowdown, I think of course the market will be affected. But I just want to share some data that let me just share this.
Yeah. Oh, sorry. Let me stop my share.
Okay. Wait. Just fine. Okay. Right. So if you look at this is some of the retail data that we have by some of the companies. So if you look at Nike, I think there were a few that missed the expectations, like Nike, Skechers, Lululemon, and Birkenstock here. So these are the footwear and the athletic leisure. Then we have others as well, like your premium luxury. I think mostly is I think about 50% is in line, 50% is not. Hermes, Canada Goose, I think Capri is Ralph Lauren and Tapestry is also in line. And I think if you look at digital commerce, mostly have beat expectations. And of course, if you look at similarly in global brands, you can see that it's about 50% that actually meet the expectations. Department stores more or less 50%. Look at the final data that I just want to point out that if you look at here, revenue-wise, 49% have actually met beat expectations, 10% is in line, 41% meets expectations. In terms of EBIT, percentage-wise, you can see 76% actually beat expectation, 7% is in line, 18% actually meets expectation. And earnings per share, you can see 78% beat expectation, 2% is in line, and 20% meets expectation. What I'm trying to show here is that while growth has come down quite a bit, you can see that it's about 50-50, right? But you can see that a lot of these companies have managed to maintain their margin. So I think we are in a slightly different scenario than what it was in the past when the US cut interest rate. I don't think we are facing a sharp slowdown per se, but of course, I think it's the precautionary steps that have been taken as we see the unemployment rate goes up as well. So those are things that we have to pay attention to. But I think if the economy remains resilient in the United States at least, I think the market will be able to sustain its upside for now. So you can see that I think Dow Jones is almost testing their 42,000 level. Then of course your Nasdaq as well. So a lot of these are probably going to depend on data in terms of your earnings when it comes out. So I think if you are able to maintain some of these margins, you can see that I think that sustained level of in terms of the share prices lah. So I think you can't just look at it from a perspective like you're cutting interest rate and then you're expecting the market to come down and stuff like that. So I think you have to look at your companies per se, specifically in terms of the growth opportunities that we are talking about, which is why we are talking about some of the opportunities that we see at this juncture. Like for example, you talk about volatile, right? So I think small cap stocks as well. I think we want to highlight some of them. Sorry, Judith, can you bring up the chart for I think the two stocks that I talk about, Arco and Helix Energy as well?
Sure. I will, we can start with Helix lah.
Yeah, I think.
Can see the screen?
Yep.
Yeah. Okay, maybe I can start more on maybe a bit more on the technical front now, right? I think for something like Helix Energy, right? I think one of the things that's at least a bit more of a positive, right, is that you can see that there's a bit of a very clear major support around this $890 level. So a very, very nice support level, right? You can also see that it's right around the bound of this gap higher, right? So I think a lot of different points where this kind of important support level is actually for now holding, which is a very good first initial sign now, right? I think short-term wise, there is a bit of a forming trend at the moment, right? But I think one of these trends that you can kind of point this towards, right, is that this kind of could be potentially setting up more like a kind of like a wedge shape per se, right? And a wedge shape, I think as I have mentioned or shared before, right, tends to be a bit more on the side of potentially forming a bit of a reversal, right? And given that this is a kind of, you can kind of play this off as a bit of a slight uptrend, right? As well, I would say that this potentially could be a bit of a continuation sign that could lead to upside if you do break out, right? And I think you can see that there's a bit of a confluence of resistance here around this near 200-day moving average. And it's also near this 50-day moving average as well. So I think if there are some breakouts from some of these levels, I would say that there is going to be some nice upside potentially for something like Helix Energy. Yeah.
Yeah, I just want to, for those who do not know the company, because it's a small cap company, it's a leading company in offshore well services, helping oil and gas companies to maintain and improve their deep water operations. So they have a bit of specialized ships and equipment that make their services more efficient and cost effective compared to traditional methods. So I think our research partners have actually pointed Helix as an attractive opportunity because of the offshore energy industry that is seeing a comeback, especially in deep water projects. So we should see some improvement in terms of their earnings and stuff. So in terms of target price, I think our research has as a target price of $14, which represent an upside about 39.7% from its current price level. So that's something that we just wanted to highlight a bit. And I think another company is Arco. I think it's basically in the news recently because they are talking about potentially selling their convenience store. If you do not know what Accor is, it's actually a US-based company that is basically your one of the how do I put it? It's like your your one of the largest operators of convenience stores and few wholesalers in the United States. So it's actually has a large network of convenience stores across the United States. So if they sell off these convenience stores, so they will be focusing mainly just on their gas stations, and of course they manage some special cards that allow businesses to use to buy fuel for their company vehicles. So I think this company has been in the news recently, and I think our research has also highlighted some opportunities there because of the potential divestment. So yeah, in terms of technical, how does it look like?
I think ARCO-wise, I think one of the interesting things is that you can see that very clearly there's a bit of a downtrend
Yep.
currently, right?
Yeah.
But at the same time, right, you're testing very close to, I think this is kind of a kind of zone now, right? I would say that there's a bit of a support zone right around current levels, right? So I think it's going to be interesting because one of the things you want to see is that if there's support around these levels, right, you can see a potential bullish divergence setup, right? So you can see that clearly prices is sloping lower. But one of the things is that your momentum actually is sloping higher, right? Very mild, but still there. So if we do see some supports around these current levels, which again, right, pretty major resistance zone, right? And of course, there's a bullish divergence setup that potentially is pointing towards upside, right? I think you could be seeing ARCO actually see some short-term upside. Yeah, I think the level I want to see clear is around this 50-day moving average, right? I think that would be the point where I see a bit of a reversal coming into play, right? Of course, that already is some significant gain already, right? But I would say that I would cap it out around the 200-day moving average for now. Yeah, I'm on more technical side.
Yeah, I think this is more like a news play than anything. So I think they have been struggling quite a bit prior to this, which is reflected in the share prices, like you can see from there. What about the Russell 2000 index? You want to share it in terms of the technical?
Oh, Russell 2000, sure. I think as we both mentioned, I think we have both mentioned and talked about this before actually very many times, right? But I think just now you were mentioning as well, right? That I think Russell 2000 is definitely in terms of small cap stock, right? It's definitely one of the plays that I think in rate cut scenario tends to do a bit better. I think Russell 2000 has just recently started a bit of a new zone, right? Like I mean on the more technical front, you can really see that I think previously, right, for the past 2 years or so prior to this recent breakout, Russell 2000 was trading in this very clear zone, right? Sideways move, right? And after this recent breakout, there's been a lot of volatility and choppiness, but you can also see that there's kind of a consolidation of kind of starting to trade above 2000 kind of zone, right? So I mean, I see this as a positive. I see this 2000 level now as a pretty inverted comma major support, right? Whereby even if you see some downside, I think 2000 level is going to be one of the important points of support to watch for, right? But if the economy continues to do better, right, and you continue to see the rate cut scenario start to play out, right, I would say that Russell 2000 is definitely one of the indexes that would start to outperform. Remember, I think unlike your major indices, right, the major indices have started to run, they have formed a new all-time high and things like that. Russell 2000 is still some ways off its all-time high. So there is some significant room for upside for Russell 2000. And I think even past that, right, there could be some further upside for Russell 2000. So, I mean, I would say that it's definitely one of the index to really continue to keep an eye on, especially in the rate cut scenario.
Yeah, I think if you are interested to invest in the Russell 2000 index, you can look into the ETFs that are available. I think the cheapest one with the expense ratio is probably the one with Vanguard. So you can compare with that. I think it's at about 0.1 to 0.2% level. So that's something that you can consider because it's a bit hard to look into small cap stocks sometimes because we're not in US, right? So okay, occasionally we can tell you some of the small cap names, but you might not be familiar with it as well. So I think one of the easiest way for you to gain exposure is really just tap on the ETFs that allow you to gain exposure directly to it.
Yeah, so sorry, just to interrupt you for a very short while as well. Since you were talking about the ETF, yeah. So the ETF for Russell 2000 actually is this Vanguard 2000 ETF. Yeah, you can really see. Yeah, I mean, I would say that it's one of the better ones as well, more of the more well-known ones. Very, very clearly tracks pretty nicely the index performance as well. As you can see, after I switched it over, not much change. The levels look pretty similar. So yeah, I think definitely is one of the ETFs that carefully can pay attention to.
Okay. What about consumer discretionary? Do you have any that you want to share?
Think consumer discretionary wise, I think for myself, right, actually, I'm just going to keep to the big names for now, right. And I think one of the names, especially I think that has come under a lot of pressure, lah, right? I mean, very, very recently, lah, right? It's things like your Amazon, right? I think Amazon still retains a pretty nice upside look, lah, right? I would say. It has begun to recover from some of the weak sell-off after your earnings, lah, right? But I think generally speaking, I think Amazon still is a very, very nice setup. It's still one of the strongest companies when you talk about cash making and things like that, right? I think on a more technical front as well, lah, right? We can see that still retains a very, very nice upside look in the sense that on a very major trend kind of perspective, the uptrend is still in peak track, right? You still can see very clear higher highs and higher lows. I think even in the more shorter term look, right? While this break was not very positive, you can also see that generally, right, we still held above this. I would count this as one of the major supports, right? And I think the fact that we did trade below it on an intraday basis, but recovered above it, right? On a closing basis, we are still holding this support, right? And I think that is one of the things I would still count as a very, very big positive. So I think retesting all-time highs, oh no, sorry, not all-time highs, retesting prior swing highs, 52-week highs, very, very definitely still a possibility. Yeah, I mean, that's definitely one of the things I'll be keeping an eye on.
Yeah, but I think when you look at consumer discretion, you also must be quite careful. Like, for example, I think look at Nike has been missing some of the expectations, in terms of revenue growth. But if you look at the likes of Adidas, I think Crocs, Under Armour, they've been doing better. I think Lululemon has also been doing pretty decent. So so this is really, really a matter of looking into the company's specific per se. But a lot of these consumer discretionary players do tend to benefit from it, right? I think like you mentioned, Amazon with higher disposable income, I think they will actually benefit from it. What about Tesla? Do you have one that's on Tesla? Just wanted to, because Tesla
I
can be
mean,
fall under both
Tesla,
tech and how does it look like?
okay, I think Tesla itself, right? I think on a longer term perspective, I still am pretty bullish on it. I think that they do have quite a bit of in terms of the fundamental side, right? In terms of their margins, and I think for an EV company, right? I think they
Yep.
definitely fall under the one of the rare EV companies that are still profitable, right? Or can still claim themselves to be profitable. Many of the other companies have tried to create some form of profitability around EVs, but many of them have failed, right? So a lot of them have started pivoting back towards your gasoline vehicles. I think for Tesla to still maintain that lead now, right? I think that's a good sign. I think one other thing that I'm paying attention to as well is, let's say if really, I think we were mentioning this will probably come up later as well, but we are talking a little bit about the presidency, the race, the election, and things like that, right? I think in the case of a Trump victory, right? Actually, I think Tesla is one of the names that could potentially benefit. I think one of the things that Trump has talked a little bit about, right, is tariffs, right? And he has very, very clearly spoken about, how he wants to make sure that, when there are going to be cars that come in or cars that are created from other places, right? They are not going to come into the US and be able to be sold cheaply per se, right? There's going to be a bit of a difference in the way that it's being done. So Tesla will definitely be one of the beneficiaries, especially if you talk about the Chinese car makers, if they're going to come in or they are going to be, let's say, manufactured in Mexico, for example, right? They're not going to come in with that cheap, lower cost, right? I think that will be definitely a big win for Tesla. So I think I would say that more on the fundamental side, these are some of the things I'm looking at. Technical side wise, I think the major resistance I still continue to hold is around this 260 level. Can really see that this has been a major resistance that has been kind of holding Tesla back for quite a while already now, right? But if you do actually manage to clear this price swing highs, right, I think one of the things that Tesla will actually begin to look like, right, is that you can see that there's a kind of a look of a, dare I say, right, inverted head and shoulders, or if you want to put it in another way, it's also a cup and handle kind of formation, right? So that is only if we start to break above the neckline, but there is some potential formation of a bullish chart pattern that is in the works, right? So I think that is something that we want to pay attention to. If it does break out, I think that's where I will probably have a lot more of a stronger look for something like Tesla.
Yeah, sorry, I know we have a question on C Limited, but before we go to that, can you just look at General Motors as well? I think General Motors have done, I think year to date, it has gone by 35% or so. I think over the last 5 years, the share price has gone up by around 27% as well. So just wondering, with the interest rate cut, probably people will be able to spend more in terms of buying vehicles. How does it look like for them in terms of technical wise?
I think technicals for GM is, excuse me, is a bit similar to something like Tesla, right? So I think one of the things that you can see that definitely there's a bit of a short-term wise is not all good, right? Not all positive. Definitely in a better state than Tesla in the sense that from the absolute lows of 2023, right, you can see that there's a very, very clear rally. And I think unlike Tesla, right, it's coming off what has been a very, very clear downtrend now, right? So I think you are currently trading near levels of, I would say, a pretty major resistance level, right? Support turn resistance level. So near this $50 level, right, which is also where this kind of price support kind of comes in, right? This continues to hold as a major resistance. You can see that in recent times as well, continues to hold as resistance as well. And then I think the other side of it is that the RSI is also a bit all over the place, right? So there's no clear trending momentum to be had for now. Unless for me, right, one of the things I'll look for is that I want to see a breakout, and I think consistency in maintaining above the 40 in terms of the RSI. For now, I think short-term wise, there is some degree of potential in terms of that starting trend, right? So you can see that in the recent pullback, held 40 of RSI, you're also kind of holding this $43 level, right? So I think I would say that that's the first initial upside sign that is positive. Now I want to see it kind of break above this $50 resistance, right? If you can break above and follow through the upside, right? I think the next bond definitely we can look at is going to be around this 53.60 kind of level. And after that, out of that will be your, prior swing highs really, yeah.
Okay. Now, for those of you who do not know, I think the average target price that analysts have for General Motors is at around 57 level. So that represents around close to 17% upside. So I think we have a question on C Limited. Do you mind showing the chart while we wait
Sure.
for that? I think our analyst has a target price of $88 for C Limited. So I think the upside is close to 30% now. So I think we are still optimistic in terms of the fundamentals of it. What about from a technical perspective?
I think technicals perspective actually quite aligned with that price target, right? But I think one of the reasons why I really align with it is because you can see that it's actually right around the bound of a previous kind of a resistance level, right? You can see that there's kind of a resistance zone that's forming around this $88 to 90, 93, $94 range, yeah. I would say this whole bound, right, kind of continues to form as a bit of a resistance zone. So for now itself, right, the minute we are still on the trend of upside, right? You can see the clear formation of high highs, high lows, right? And I think the other side of it is that RSI, right, you can see some degree of beginning improvement, right? Which is that even in the pullback, it's holding above 50. So generally, I would say that it has the look of keeping more on the bit of a bullish zone in RSI. Price also seems to be forming a bit of a high high, high low momentum now, right? Which is a good thing. Now, I think one of the worries for me is if we do kind of, even if we do kind of break out and we start to see a bit of movement towards $88 level, but if RSI actually doesn't kind of push above this near 76 level, right? I think again, right, that will set up as a bit of a bearish divergence, right? I think that will be a bit of a worry for me. That could point to some short-term downside. I would say that the $76 level is going to be a point of support, right, in that case. But I think generally speaking, I would quite like see at $88, yeah, for now.
Okay. Just on a fundamental perspective, I think earnings have been convincing. I think the second quarter, C Limited continued to report strong top line growth, and of course, I think they also raised their guidance for Shopee's GMV growth from high teens to around mid 20%. So that's something positive from a fundamental perspective. Right, we do have questions on Coinbase and Shopify. So I think we did mention just now, I think cryptocurrency related stocks. I think one of them is Coinbase. So from a technical perspective, Judith, do you want to show it? Yeah.
Yeah, sure. So I think Coinbase itself, right? I think one of the things that we can see that there's recent weakness, right? Very, very nice initial trade momentum upwards in late 2023 to early 2024, right? But after that is really, really clearly stagnation, right? That stagnation also follows with RSI continuing to form lower highs, lower lows, right? So very, very clearly you can see that there is some degree of bearish confirmation that's taking place right now, right? And I think that's definitely not the best look. So one of the things that I do worry for something like Coinbase, right, is that a lot of it depends also on it does come quite in line with crypto prices for very, very obvious reasons, right? But I think there is some competition that's beginning to set in the form of things like your cryptocurrency ETFs, right, which I think could be taking away from Coinbase in exchanges like Coinbase. So I think I do worry a little bit on that front, but generally speaking, I would say that it would, alongside cryptocurrencies, have rallying effects, right? And I would say that to kind of test up towards the kind of previous swing highs around this $200 level is very, very much doable lah. $210 level, sorry. Very, very much doable.
Yep. I think if you look at I think even the consensus, I think it also deviate quite a bit. I think it goes as low as 130, but the highs are around 400 target price level. So it just shows the volatility of the stocks itself, lah. So I guess it's mainly
Yeah,
because
yeah.
of the nature of it. What about
Mm.
Shopify? Do you have the
I think Shopify wise, actually, I think interestingly, lah, right? Actually, I had a bit of a trend pick on it recently, lah, right? And then it did kind of hit that first target price that I was kind of looking at. It was after this kind of earnings move, lah, right? I think it did kind of hit my first target price, right? And then from there itself, I think we did see a bit of a downside move towards a 50-day moving average. But you can also see that 50-day moving average is acting as a bit of a support, lah, right? So on my view, lah, right, the technical trend wise itself, I think the 50-day moving average, this first target price for mine, lah, right, continues to remain the level to beat. You can see that there's a bit of a hammer candle formation, lah, but I do firmly expect that if we do see a breakout and a follow through of that as well, lah, right, I think it could test towards my second or even third target price, all right. My second target price is probably around, if I remember correctly, it's near this resistance level, and I think the third target price is the prior swing highs, lah, yeah, around this near $90 level. I think there is some degree of room for upside for Shopify lah, if they can break out from some of these levels. Yeah.
Okay, thanks, Judith. I think we can move on to some of the AI stocks that we've been talking about for a while now, right? I think in our previous sessions, we've talked about all the tech players like your Nvidia, your Microsoft, and your Apple. So can you just look into Nvidia first? I want to look into it from a technical perspective. I think
Sure.
there are quite a bit of questions whether the AI hype is real, or is it, is there really a structural growth in it, or is it all hype? There's a lot of concern in terms of whether the sales and growth can be sustained. I mean, I think for Nvidia, I think their most of it are coming from 4 or 5 customers, right? The revenue that I've been seeing, many coming from the big tech players in terms of the investment.
I
Yeah.
would, I think that's one of the things I really, really clearly agree on lah. Yeah, sorry, that was not okay. So I think one of the things that when we talk about Nvidia itself lah, right? I think firstly we have to talk about it in the form of the earnings perspective lah, right? So I think very clearly the earnings still show that there is some degree of upside that continues, right? I think a lot of the fears are also overplayed, right? But I think a lot of the worries is because I think Nvidia itself, right, has already reached a point where valuations are really, really sky high already, right? So I think that's where the market is really, really considering whether, the future growth, they are not going to be able to keep up to some of these levels of previous levels of growth they have shown, right? And the quarter-on-quarter growth is really, really beginning to slow as well. Whether this next generation Blackwell chips is going to be the thing that, pushes Nvidia again over the top, continues that pattern, I think that is something that really, really remains to be seen.
Yeah,
But
I
one of
think
the things that Nvidia definitely they were talking a little bit about, right? I mean, correct me if I'm wrong, Billy, right? But I think the last that we've heard from the CEO, right, he was actually very, very bullish on Nvidia. I think that's also the day where we saw this bullish upside spike, right? I think this 11th of September during the conference, right? So I think generally my take on the technical front, right, is that there is a bit of a bearish divergence that's still, no, sorry, not bearish divergence, the bearish confirmation that's still taking place, right? You can see that I have this very clear red line. Momentum is still following this red line of lower highs, lower lows, right? And your price is also kind of still following this red line of lower highs, lower lows. Your 50-day moving average is continuing to form a bit of a resistance, right? So I think unless this kind of clears out, I think that continues to remain a point of concern, right? But you also can see that that kind of sets Nvidia up in a bit of a dare I say, right, symmetrical triangle formation, right? So you can see that there's some low in terms of the uptrend line itself, there's a bit of a potential uptrend line that's forming around this level, is around this area as well, right? So normally this flex indecision, when there's a bit of a formation of this symmetrical triangle, it can break out in either direction. Now, I mean, my slant will actually be a little more towards the positive side, right? Because I do think that in terms of as far as artificial intelligence goes, Nvidia is definitely one of the clear winners of it, right? And they continue to remain a clear winner until otherwise stated, right? I mean, very clearly, chips has really been doing well. Their Hooper chip demand still remains very healthy, right? The last that we have heard from them. And then their Blackwell chip fears are a bit overstated, right? They are expecting still a lot from Blackwell, right? So I think that all these things do point towards, to me now, right? Nvidia still having some degree of upside. I think Billy, our partner is actually written a bit of Nvidia as well. Like, would you like to share about it as well?
Yeah, I think we have a strong buy call for Nvidia as well. I think the target price that we have is at 140 level. So I think they actually upgraded the target price from 120 to 140. So I think in terms of the earnings wise, they have shown that, you know, the momentum is firmly on track. Of course, the BlackRock inventory concerns, I think there was a bit overhyped, I guess. But
Mm,
I think like what you say, I think at this point in terms of AI, the thematics for artificial intelligence, I think NVIDIA is clearly the dominant players. And I think we are at a building stage where a lot of these big tech companies like Microsoft, Amazon, I think the Apple, and I think all of them are building up their capacity, like even Meta. So a lot of these infrastructures is being built onto. I think some of the risks that probably investors want to pay attention is in terms of regulation. I think there is concern about the dominance of NVIDIA because of the ecosystem that they probably force their customers to go into. There was a news that Microsoft has a disagreement with NVIDIA prior to this on some of the technical parts and apparently NVIDIA wanted to enforce some of the stuff to
mm,
to sort of maintain that dominance per se. So I think those
mm,
are some of the risks that we want to look into because I think it's in the news. The regulators are
mm,
looking into it. So I think, of course,
uh,
it's not just NVIDIA. I think if you look at the likes of Apple, I think there is
mm,
also a regulation. I think the European is actually looking into them, whether
mm,
calling them to open up their system to allow other players to take advantage of their payment system and of course their Siri as well. So a lot of these
mm,
things are going to happen not just for Nvidia but along the tech space. So these are areas that we wanted to pay attention. But I do agree structurally, the AI growth I think will continue. I think Nvidia will be definitely one of the key beneficiary until proven otherwise lah.
mm.
So
I think,
sorry,
yeah.
yeah.
I mean, I just wanted to add on a little bit to your point now, right? Because you're talking a little bit about the struggles in terms of the Europe, the more authorities coming down hard on companies, right? And I think the Digital Markets Act in the Europe itself is definitely one of the things that really has been a bit of a struggle, right, for many of the big tech companies, right? I think many of the big tech companies have been falling prey to it. And I think right now, right, in the EU itself, one of the names that's actually facing a lot of this big tech, a lot of these regulation struggles are right, actually is on the Alphabet side, right? So I think fundamentally speaking, I think one of the things that we talked about Alphabet more on a bit of a positive light, right? But I think you can also see that there's a very, very clear kind of downtrend pattern kind of forming, and a lot of it is very justified in terms of what they are facing in terms of the regulations now, right? And I think they even for the first time ever, right, they are actually offering to offload one of their business or part of their advertising technology business, right? I think it's the edX portion. So I think if they do really let go of this edX portion now, right, I think that is going to be considered actually a pretty big win for EU. But even then, right, actually EU wants to come down even harder on Alphabet. So edX is actually not enough for EU. They actually want to they want Google to actually offload even more of their this advertising business stuff, right? So I think this will be something that's going to be interesting to see. I think going to see how it plays out for Alphabet is going to be a very, very big question mark, I would say. I mean, would you agree, Billy?
Yeah, I think these are things that we have to really look into for the big tech players. I mean, especially if the election coming, I think a lot of noise surrounding this area will continue to come out. I don't think it's just Alphabet. I think even the likes of Meta will also face a lot more scrutiny. You look at Twitter, for example. I think, of course, Twitter is no longer listed, right? Sorry, by the way, it's called X now. It's actually banned in Brazil. So I think there is a lot of these things that we have to look into, especially when look to I mean, especially when countries are becoming more protective of their own economy. So these are some of the areas that we want to look at. But sorry, I just wanted to, I don't want to jump into the regulation part yet because I want to talk back about one of my favorite company. I want to talk about Microsoft.
Okay,
Yeah,
okay.
because
Microsoft is good.
talk about their increase in terms of their dividend as well as 60 billion share buyback program. So things have been going
Mm.
up quite a bit for them after the news. Just want to see in terms of from a technical perspective, what are we looking at?
I think Microsoft wise itself, right? I think one of the key levels I've always kind of talked about, right, is around this $400 level, especially in the past year or so, right? I think for now, Microsoft continues to kind of hold near this $400 level. Yes, there have been some kind of breakdowns or choppiness around this $400 level, but I mean, largely has remained a clear level of support, right? So I think as long as that remains the case, I think definitely there is clearly some building upside that continues, right? I think one of the points I'm a bit concerned for Microsoft in terms of the technical side, right, is that you can see that this $440 level kind of remains a bit of a resistance, right? There's a bit of selling that takes place right around that level, right? And I think a lot of this is despite what has been some positive news, right? And I think that is also why you talk about this rally, right? So I would say generally the short term wise, right, there is a bit of a bearish confirmation beginning to seemingly set in, but there's nothing. I don't expect Microsoft to really break below this $400 level again, right? Even if there's some volatility that continues, and I think in the longer term, I would still expect a retest of some of these prior all-time highs, Yeah, I think Microsoft was the names that definitely can take advantage of artificial intelligence. Yeah.
Yeah, I think I mean it's the concern. I think there was quite a bit of concern in terms of whether tech companies are spending too much on AI and the return are going to be slower than, So that was some of the concern. And I think the recent news of the dividend increase and of course the share buyback program is basically a signal that the company is sending to investors that they are enough capacity to invest and of course to even increase their dividend. So I think this is one of the areas that, it just shows that especially for big players that have dominant play in the AI space that is real in terms of the growth. Just want to talk about one company that is struggling that I actually give a bullish call, but hasn't been doing so well. Intel. I think Intel just announced some billion-dollar AI partnership with Amazon as well. So they've been getting quite a bit of the grant from the US, but they have not been doing so well. So yeah, what's from a technical perspective, where can we look at the support level?
I think one of the interesting things about Intel, the way they're setting up, right, is that actually there is beginning to be some look of some technical supports around this near 18.50 level, right? I think one of the things that you can clearly see is that momentum is clearly sloping upward for RSI, right? But I think price is clearly kind of still sloping a bit downward. Now, resistance around this prior swing high and this kind of, before we even talk about starting to close this big gap lower, right? Yeah, I mean, it's still holding on, right? It's not clearly towards the upside yet. But I think if you start to break above this initial bound of upside, right? Initial bound of resistance, right? I would say that the upside potentially towards this 50-day moving average is going to be pretty much a very, very doable thing. I think past that, I think it's going to be pretty hard, right? I think to close this gap, it's some ways away. Yeah. I would say technically, I would expect at least the 50-day moving average to be tested.
Which is at 24, 25 level, right?
Near 25, 24.50, I would say, around there.
Okay. All right. From a fundamental perspective, just to share, I think one of the reasons why Intel share price has come down quite a bit was, of course, the announcement of the cut in terms of their employment as well as, of course, the delay in some of the foundry as well. But I think one thing to look into is that I think Intel is emerging as a rather different company than what it was, instead of just focusing on the design of the chips, and they're focusing a lot on the foundry and of course manufacturing of chips. So I think this is going to play out well for them in the longer term, especially with the US-China trade friction, because I think Taiwan, while it is, TSMC is one of the biggest foundry players, but because of the nature of the geography and of course the challenges in terms of how the risk of China, so that benefit Intel in the longer term, as we will see probably some of the companies will probably move to Intel manufacturing. But as of now, we have not really seen a lot of that yet. And of course, the manufacturing plant will take some time before it really materializes. But these are some of the key areas that we probably want to look into if you're looking to invest in Intel in the longer term. Right. I think from here, I just want to move to, because I think Intel benefited a lot from the regulation in the US, especially under the Biden administration. I think they're one of the biggest winners in terms of all the grants. So to the next question, the US presidential election, right? I think before we talk about which stocks will benefit from, whoever emerged as the winner, let's just take a look at, let me just quickly share this. Sorry, yeah. So this is basically what we have. I think, can you see this, Judith?
Yeah, it's up.
Yeah, so our previous projection that we have is that I think Trump was supposed to have a 55% win, it leaned towards Trump. But I think after the elections that we have seen, and of course some of the momentum that the Democrats have shown, I think there is some downward in terms of percentage to about 50-50. So everyone's not sure, it's looking at, I think if you look at some of the polls, it's leaning towards Harris. But if you look at, looking at historically, if you remember the last two polls, the last two elections that we have, two of them actually downplayed Trump's chances of winning the election. So I think there's a lot of risk on their front. So if you look at House, they're looking at 55% for Democrats, 45% for Republican, and of course the Senate, they're looking at 70% the Republicans and 30% the Democrats. Right, let's go into you want to go with Trump first, right? I think remember you said you want to go with Trump first, right?
I think on the front now, right, I think definitely I lean for myself now, right, I definitely lean a bit more towards the Trump trade because I do think that there is a higher likelihood of his presidency, like looking at the polls and looking at the recent momentum. I think the second assassination attempt is actually a bit of a tailwind for him now, right, in terms of really consolidating his base further and rallying Republicans to have a turnout now, right. I think this could be one of the years where we have the strongest voter turnout in terms of Republican side now, right, because the two assassination attempts is really quite a big deal. Yeah.
Yep.
So I do lean towards a Trump victory, and I think with that regard itself, right, I think some of the things that we are looking at. I think you mentioned cryptocurrency as well, isn't it, in the rate cuts? And I think one of the things that we potentially could be saying, right, is that because Trump did previously talk about cryptocurrencies in a not very positive light in the past few years, but I think more recently, right, the way that he's talking about cryptocurrency is actually a lot more positive, right? He's saying that he wants US to be the cryptocurrency hub for the world. So I mean, in such comments, right, that actually drive a bit more on the positivity in terms of cryptocurrency, which is why when Trump is actually ahead around the polls and things like that, right, I think actually you're going to start to see things like Bitcoin and your Ethereum do a bit better. So I think one of the things definitely on the Trump trade is definitely cryptocurrencies, right? I think alongside rate cuts, I think this could be another tailwind factor for cryptocurrencies, right? And I think two of the names that you could potentially consider, right, as an investor, is actually you don't need to go into the crypto wallets and things like that. If you really just want to invest into the ETFs that actually hold the currency itself, cryptocurrency, I think one of them could be this Bitcoin Trust, right, which is iShares Bitcoin Trust, iBit, right? The other one is FA, right, from a Grayscale Ethereum Trust. So I think these two names that I think you would have seen before, and I think it's names that potentially could be some victories. I think outside of that itself, one of the other names that I think a bit more on the smaller name kind of space, right? But I think Geo Group is definitely one of the names that I think some investors are paying attention to. Why? Because I think Trump has really been talking about coming down hard on crime and things like that, right? And the current infrastructure, there's a lot of question mark whether US can handle if there is going to be a toughening on the crime stance. And so Geo Group is actually one of the names that if you talk about they are private security or private kind of prison group per se, right? I think they are one of the names that could potentially benefit if US actually adopts a more hardline, tougher against crime kind of stance, right?
Yep.
Geo Group is definitely one of the names that could benefit. I think you have some names as well, right, Billy? Is there any names that you want to mention?
It's okay, but I'll just probably add a bit on your cryptocurrency comment.
Oh,
Of course, there is a bit of risk on their front because crypto is a very, very volatile market. So let me just
sure.
remind that. But I think if you follow
Yeah.
the campaign that Trump has, I think they're talking about if he were to be reelected, he would create a strategic national Bitcoin reserve. What that means is, I mean, there's no clear direction of what that means at the moment, but it does send a bit of expectations that, the Trump administration, if they were to be reelected, will be focusing a lot more to make it more probably easier to access for and less regulation to control the cryptocurrency market, right? So I just want to add on that. I think you can also continue. I think you have a few more names that you want to bring in.
Oh yeah, I think in terms of I guess another thing about one of the things I think I mentioned earlier in terms of tariffs and things like that, right? Actually, it could benefit names like Nucor as well, right? So I think Nucor has been in the news not very positively recently, right? In the sense that they actually did just provide earnings guidance or at least ahead of expectation, right? Or ahead of their next earnings release, they actually provided a bit of a potential update. And I think it's definitely more towards the downside, right? With the steel prices and things like that still being affected. But I think one of the more positive takes is that the downside in terms of earnings, right, was actually expected by the market, right? And despite what has been a pretty tough market, right, I think Nucor is actually still doing pretty all right on a more fundamental basis. And then on the technical front itself, right, I think the other thing that I would pay attention to is that it's actually trading very near to kind of like prior supports as well, right? And you can see that there's a clear bullish divergence setup, right? Alongside this falling wedge pattern. And falling wedge pattern to me normally flags reversal, right? So given a very, very strong downtrend, right? And given the fact that it's forming now this bullish wedge, right? My take is that if we can break above this overhead resistance, right? And RSI continues to show some degree of upside, right? I think we are definitely beginning to look more and more like, new call could actually potentially be in the next phase of upside, yeah. So I think the tariffs definitely will benefit new call, I would say.
Yeah, maybe you want to also show the Caterpillar. I think Trump's focus on infrastructure development could potentially benefit, some of these heavy equipment manufacturers. So you want to just
Sure, I think that's a pretty good shot as well, I would say that generally. So generally for one of the things for Caterpillar is that you can see that it's had a pretty nice run and rally, right? Again from October lows. From there itself, from March highs, you can see that there's kind of a low highs, low lows pattern that's beginning to form, right? And I think it continues to kind of remain in that way, right? There's a bit of a major resistance around this $362 level, right? Or near there, right?
Yep.
And I think as long as you don't break out from that, right, there's still a bit of a more sideways look that CAT keeps. But generally speaking, right, I think we are beginning to be at a stage whereby I think the 200-day moving average could potentially remain as a support. And if that's the case, right, I think the likelihood of breaking out from this $362 resistance and I think continuing to follow through the upside, I think pretty nice and strong. So I think CAT is one of the names that I think definitely in the technical front, right, we do break above 362. I think there could be some realm for further upside.
Okay. In terms of what about if Kamala Harris were to win? What's your big take if the result doesn't go your way, right? Doesn't go as per your expectation. Which one do you go for? Like I think probably on renewable there is some that we can bring out. I think we talk about next era energy just now, right?
Yes, I think you are very, very correct in that. So I think one of the things on the renewable front definitely is Nextera, right? I think interestingly, I actually had a bit of a transporter pick on Nextera, already close in the green already, right? But even past that, right, it's actually rallied above my target price. I think it's rallied above my first target price already, and it's on the verge of moving to a second target price. So definitely good signs, right, in terms of the current uptrend itself. For me, right, if Kamala Harris wins, I think one of the big beneficiaries definitely will be this type of things like solar stocks and things like that, because it is really one of the big focus of the Democrat Party, right? We talk about renewables and things like that. And again, while their narrative has recently shifted towards being a bit for oil, they're not going to ban fracking and so on and so forth. It has previously been that, right? So if that continues to remain the case, right, I think definitely renewables is going to have a very, very strong and heavy focus. I do expect that if Kamala wins, there will be more and more potential bills that surround the importance of renewables and even government funding for renewables. So I think next era will be one of the beneficiaries. Potentially another one would be First Solar, right? I think First Solar is a bit of an interesting from FSLR, I think. Yeah. I think First Solar itself is a bit of an interesting name as well, because I think it has had a very, very nice strong rally into above for 2024, right? To start the year and in the mid-year itself. But after that, you also can see kind of a pretty strong weakness. And at the moment, it's a bit of a sideways trade, right? First Solar also had a very, very nice rally. I mean, previously, right? I mean, all the way from your 2022 lows, you can really see that it has come up very, very strongly already. Is there still room for upside? I would say that First Solar, given the fact that it's one of the small cap names, right? I think even if you talk about a Trump presidency, First Solar could still be one of the names that remain pretty all right, right? But I think in the case of a Kamala Harris win, right, I think First Solar is definitely going to be one of the names that really will benefit from things like grants and so on, right? Given that they are a smaller firm as well, funding is always going to be a bit of a question mark. I think definitely one of the names that could benefit.
Yeah, and I think I just want to bring up one name that you mentioned it earlier. I think Tesla might benefit from Trump. I mean, Trump winning the election, right? What about if Kamala Harris win? Do you think given given the publicly endorsement by Elon Musk for Donald Trump, do you think Tesla will still benefit from it? Because there's still a lot of push for EV and green initiative, right? So Tesla is in a way still gonna benefit from it.
I think I would say actually that is kind of true, right, to a certain degree. But I think one of the things about Kamala Harris being right, that I'm a bit worried about, right, is some of her rhetoric around some of her policies, right? So I think one of the big policies that she has actually mentioned that she wants to do, right, is let me see if I can get it right. It's a capital unrealized gains tax.
Yeah.
I think that's something that she has pushed before. So when you're talking about things like an unrealized gain tax, right, you're really, really going to drive the market lower, because if she really ends up playing this out, right, I think you will see funds flee away from the market. People who own stocks, or people who have been holding stocks for a very, very long while, they will start to at least reposition themselves. Because if they don't reposition themselves, these are unrealized gain tax will really, really hit them very hard. So in such a case, right, definitely you are going to talk about a very, very big major downswing, right? So I think that's another thing, that's another worry for me if you talk about Kamala Harris presidency. But I mean, even outside of that, right, I think one of the things that I would worry about for Tesla, right, yes, it is definitely more the green energy side. It definitely should be one of the names that, the party will be more, should be actually quite amenable to. But I think at the same time, we also have seen, right, that I think when they are not happy with certain issues, sometimes there could be some pushback by the government, right? I think Tesla could be one of the names that actually faces that kind of trouble just because of having Musk as the face of the company, right? So I think given that they might even push towards things like your GM and Ford, right, or try to push away from your names like Tesla. So I mean, it's a very, very big question mark for me, I really don't know at this stage. Yeah.
Yeah, when you talk about the tax on the unrealized gain, I think it will not just be Tesla, right? I think it will be across the market. And I think
Tell me
if
about it. Yeah.
that were to be the case, I think the US will probably be one of the first developed market to introduce this, which could probably disrupt some of the momentum that we are seeing in terms of the stock market. Right, I
For
just
sure,
want
for
to
sure.
bring one more name that I think personally will probably benefit whether it is Kamala Harris or Donald Trump win. Lockheed Martin. I think Trump prioritized defense spending, and I think the defense contractors like Lockheed Martin, especially when you look at, of course, well, the Democrats talk about if you look at talk about renewable and a lot of this, but you've seen quite a few wars that have triggered during the Biden administration. So this has actually benefit Lockheed Martin quite a bit. So my personal view is that regardless of which administration, I think Lockheed Martin will probably benefit from it. Yeah, you probably want to look at it from a technical perspective. You can see an upswing, right? A sharp increase from there.
Yeah, tell me about it, man. There's a very, very strong, sharp upswing, right? I think one of the things that I think you are exactly right in saying, right? Even if no matter who wins, right, the current question marks around the all the different geopolitical struggles in the world, right, still continues to remain present. And as such, right, the names like Lockheed Martin will continue to remain one of the more prominent names, right, in terms of defense space. I would say that I do quite like the name, but I would want to be cautious of short-term weakness, right? I would be a bit worried about it for now, right? Because I think very, very steep a lot of very, very steep entry, right? And I think currently you can also see there's a bit of a bearish divergence setup, right? So I think that's the thing I'll worry a little bit about. I would say that I will wait for a bit of a pullback towards the 50-day moving average, also represents one of the breakout levels, right? I think there's a bit of a consolidation took place before it really continued, right? So I'll say 50-day moving average is one of the points I'll first keep an eye on for Lockheed Martin. But I would say that there definitely is a bit of a budding momentum for Lockheed Martin, and even the general trend or the major trend for Lockheed Martin still remains pointing higher. So yeah, definitely a very good shot.
Yeah, I think I wrote about Lockheed Martin back in 2022. I think back then it was at 300 plus level. I think of course I think one of the key risks that we're looking at when we talk about Lockheed Martin is of course the debt level that the company has. But given that the sensitivity of the industry that it is in, I don't think the US government will allow it to fail. So I think that's where the upside is. Of course, there is also the ethical issues, whether you wanted to invest in a company that manufacture weapon, right? So that's one area that we want to look at when we talk about companies like this. So
For sure.
that's it on my end. Do you have any other last things that you want to add on? Maybe some key risks or some that you think you want to look at before the market starts today?
I think generally, I think one of the things that I'm going to keep a very close eye on now, right? I think just to close off this entire session, I think I think that both the S&P 500 and like things like your Nasdaq, there is a bit of a pattern that's beginning to set up in the sense that, like, let's say for your Nasdaq itself, right? You can see that I have in gray lines, right? This kind of symmetrical triangle formation. I would say that if there is a breakout towards the upside, right, for something like this symmetrical triangle formation, there could be potential continuation of upside, right, for something like Nasdaq. And I think similarly, right, you see for your S&P 500, there is a bit of a ascending triangle formation as well, right? So right around this resistance bounds for now, the upper bound of this resistance, you can see that there's a bit of a pattern formation forming, right? really can break out towards either direction, right? But I would lean more towards a breakout towards a positive side for now, right? And with that being said, right, I think I mean I would want to wait out for some of these breakouts. I think once it takes place, right, I think there could be some continuation of furthering into upside. Yeah, I think this even extends towards, of course, your Nasdaq is very, very closely related to your technology sector, right? But you can see that that very same formation exists within your technology sector. I think a breakout in line with your RSI moving above 60, right, which has clearly been something that has helped your Nasdaq and your XLK back, I think would be positive for the markets. Yeah, so I think I will keep a very, very close eye on that.
Okay. There's a question on the US small cap. I think we've talked about it. I think the small cap is one of those that will benefit from this. And I think we've mentioned both the Russell 2000 as well. So yeah. All right. I think that's all for today. If you've missed out any of the sessions, feel free to reach out to us if you have any other questions or anything. And we will be coming back next month again for another session. All right. Thank you, everyone. Have a good night. Bye. Judith, thanks.
Hey, thanks everyone. Take care. Bye-bye.